hear me, sir? Just testing.
Yes, I can hear you, sir. So we are going live now.
All right.
Okay, good afternoon, everybody. Good afternoon, good afternoon, good afternoon. So we are finally here. Good afternoon, Mr. Agbo. Good afternoon, everybody. It's a big privilege and honor to have Sir Mukhtar here finally. It's been a long time of planning and all, and is finally here. Thank you very much, sir, for coming around. It's a privilege to have you, and we do not take it for granted at all. Thank you for coming around to share with us from your world of experience. But before we dive in straight into what we have for today, we have two things to do. Number one, I would like to check if everything is clear. So our participants, please, if you can hear me, if you can see, kindly type clear. Use the comment section and type clear so that I will know that the coast is clear for us to take off. Just type clear. So I will know that yes, the coast is clear for us to take off. Clear, 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 clear. Please type clear so that I will know if it's fine. Okay, you can hear me. That's amazing. That's fine. So Samukta Muhammad, thank you very much once again for coming around. I believe quite a lot of people enjoyed yesterday's session, and some of them are already putting it into practice of what they learned yesterday. I've gotten quite a lot of feedback, and I believe that your session will transform the lives of our participants today, and it would skyrocket their financial level and life from where they are now into another level and stage. So before we start, let me just read Sam Mukhtar's content so that your heart will be prepared. This is going out to our participants now. I'll be reading his content before I hand over the stage fully to him. So please listen and listen attentively. Mukhtar Mohammed is currently a product development analyst at Nigerian Exchange Limited (NGX) with regulatory experience, having worked in the listings, regulation and regtech department of then Nigerian Stock Exchange. So Nigerian Stock Exchange is now Nigeria Exchange Limited. Am I right, Sir Mukhtar?
Yes, sir,
Am
you're
I
right.
right about
Nigerian.
okay?
Yes, you are.
Okay, so we have Nigerian Stock Exchange before, which has now changed to Nigeria
Nigerian
Exchange
Exchange Group.
Limited. So that's the first thing for everybody to learn here. So you won't keep saying Nigerian Stock Exchange. It has changed. We've evolved. So he's an associate member of the Chartered Institute of Security and Investment, UK, and has an MBA in Finance and Investment. He is also a faculty member with X Academy, the training arm of the NGS, that's the Nigerian Exchange Limited, where he facilitates several courses, some of which are international introduction to securities and investments, wealth and investment management. Mukhtar is interested in value addition, committed to learning, succeeding, living, and inspiring. He believes that he believes in the best type of life. So our dear participants, welcome with me, Sir Mukhtar Mohammed, as he takes the stage. Thank you, sir.
Thank you very much, Havilah Global Exchange, for having me.
Thank you,
And thank
sir.
you, everyone, for coming in. So we're going to go straight in. Am I going to be presenting? Because, okay, so let me just give a bit of background. Our session is going to be practical. It's going to be really hands-on. However, I'll have to set the foundation first. After the foundation, I need to explain certain concepts to us so that we understand what it is we'll be talking about. Um, the topic I'm supposed to handle today is about leveraging the stock market. So explain in details. Most of us might be thinking that okay, stock market, it's broad. Yes, stock market is actually broad. How be it? How be it? There are certain things that we need to understand as investors if we want to play in the stock market. So I'm going to be breaking it down for you. So I'm not going to waste your time. We're just going to go straight into the meat of what it is we need to discuss. So that's the foundation. Once I give us the foundation, then we're going to the practical session and I'll show you how to go about it, what tools you need, what it is you need to use, what arsenals you require for this. After that, then we can now go into questions and answer. So basically, those are the three things I'm going to be doing, and I should be out of your face in about 1 hour maximum or thereabout. So moving on, leveraging the stock market. So just go straight to introduction. That should be the next slide, please. Yes. All right. So introduction. There are different kinds of analysis. I'm going to focus on just two, or rather, I'm going to focus on one. They're basically technical analysis or fundamental analysis. How be it if we are talking about stock market, then our focus is actually going to be on fundamental analysis. So let me just explain what technical analysis is. For those persons, for those of us that trade forex, we typically understand what technical analysis is. It simply involves the reading of charts, price movement, how historic price actually affects future price movement of anything. It could be securities, it could be any securities. So securities being stocks, it could be bonds, it could be forex, that's currency pairs, it could be metals, it could be commodities, whatever asset class, you can use technical analysis to analyze it. And based on your understanding of technical analysis, you can go into that kind of investment. But that's not our focus for today. Our focus for today is a bit of fundamental analysis. Now, fundamental analysis involves us having to go to the basics, the foundations, the fundamentals, the financial accounts of these companies that are listed on the exchange that we plan to invest in. So we'll have to be talking about something like the income statements, we'll be talking about something like the balance sheet, we'll be talking about something like the what's it called? Cash flow statement. So basically, there are three accounts that we use to on in financial accounts. So you have the income statement, you have the balance sheet, and you have the cash flow statement. Basically, those are the three kinds of statement. How be it, we are not going to be talking about that. That is a discussion for a different class. Our focus here is basically how can we understand what's happening currently in our economy, and based on what our economy is saying, we can now go ahead and invest in the you cannot go ahead and invest in the stock market, whatever the stock market is. So I want to bring a bit of background and context. So our case study, how big everything I'm teaching here is applicable to any economy. However, our case study economy is going to be Nigeria. And for those of us that are wondering if we are going to get the slides after this multi-call, after this training, the answer is yes. I believe Havilah Global Exchange is going to send it to you because there are some useful resources that we need for our practicals. They're actually in this slide. So you actually get it. So that's the background. Two types of analysis, two types of investment analysis, technical and fundamental. I've already explained what technical is, and I've already explained what fundamentals is. So aside from looking at the financial accounts of an organization of a company that is listed, there's another kind of fundamental analysis where we look at what the economy is even saying before we go into the financial accounts. So the financial accounts is the second part. The first part is actually what is the global economy saying? What's the economy of that nation saying? Are we in recession? Are we in recovery? Are we in boom, or is it decelerating? So that brings us to the next slide, which is the economic cycle. So basically, we're going to spend a bit of time here, and I guarantee us that if we understand what I'm going to communicate here, it becomes very easy for us to play into the stock market. So now for the stock market, right, for any investor in the stock market is the idea for any investor in the stock market is actually to buy low and to sell out. So how do you know if the stock market is going to be crashing? How do you know if the stock market is going to be buying? I'm going to explain all that to us just basically from this economic cycle. You want to buy when the stock price is low, and you want to sell when the stock price is high. You want to get in the market when the prices are low, and you want to exit the market when the prices are high. That's the whole idea. Or another approach is, if you are going to buy when the prices are high, you need to exit when the prices are actually higher. Then how do you know this? So I have a graph here to my left, if you can see it. And on the y-axis, we have GDP growth, and on the x-axis, we have time. So GDP growth, let me just explain. Basically, for those of us that don't understand what GDP means, GDP is simply the gross domestic product. What that simply means is that every expenditure, everything that happens in a nation, the cumulative of everything that happens in a nation, plus exports minus imports, everything, the government spending, the income, export and import, that is whatever it is we have, that's GDP. So GDP growth is something we use to measure the state of an economy. And so the starting point, let's start from ground zero. Ground zero. So is GDP positive or is GDP negative? If the GDP is positive, then we're most likely talking about expansion. I'll explain this. If the GDP is less than zero, that is, it is negative, then we're most likely talking about contraction. Howbeit, because the GDP is positive, doesn't necessarily mean that the economy is expanding, or because the GDP is negative, doesn't necessarily mean that the economy is going bad or going south. So let's start from the circle of an economy. The circle typically, let's start from the bottom and come back to the bottom. So it's actually a circle. So if you see my diagram to the right, so you see a complete circle. So now going back to the diagram on the left to explain what we mean. Boom is when the economy is at its peak. That's boom. The economy is doing fine. Then recession is when the economy is at its when the recession is when the economy is at its bottom. That is recession. So the topmost is boom, and the bottommost is actually recession. So so it moves from recession to recovery. That's how the economic cycle is. From recession, which is the bottom, from recession, the economy moves gradually into recovery. From recovery, it moves into acceleration. From acceleration, it moves into boom. Then from boom, it moves to deceleration, and it moves to recession again. It's a circle. This happens in every single economy, whether it's Nigerian economy, whether it's the United States economy, whether it's the Chinese economy, whether it's the Japanese economy, whatever economy, every economy has an economic cycle. Howbeit, the time it takes to move from one phase in the circle to another phase, that is from recession to recovery to acceleration to boom to deceleration and back, it differs for every nation. And that depends on how good their policies, their economic policies are. It could be monetary policy, or it could be fiscal policy, or it could be a combination of both of those policies. That is not the context of what we are talking about today. So our focus is just understanding how GDP growth affects investment in stock market. So still on the time it takes. So overall, at an average, it takes 5 to 7 years for an economic cycle to complete. What I mean by 5 to 7 years for an economic cycle to complete simply means it takes about 5 to 7 years for the cycle to complete. That is to move from recession to recovery to acceleration to boom to deceleration and to recession again. An average of 5 years minimum. Maximum, it could be more than 7 years, but average 5 to 7 years. So it takes to complete that cycle. Howbeit, an economy can move from recession to recovery. An economy can move from recession to recovery in less than 1 year. It can move from recovery to it can move from recovery to acceleration in 1 year. It can move from recovery to acceleration in 6 months. It can move from recovery to acceleration in 3 months. All these depends on how the economic policies, whether it's the monetary policies or the fiscal policies, how they are applied, and how quick the government wants to move its economy. Just as an economy can move from recession to recovery, an economy can also go back from recovery to recession. So it's not a hard and fast rule that from recession it moves to recovery, and from recovery it moves to acceleration. It can be in recovery and we are expecting it to move to acceleration, but it doesn't go to acceleration. It comes back to recession. Or it can from acceleration and go to boom, and from boom it can go to deceleration, and you can experience boom for say 2 years, you can experience boom for say just 3 months, you can experience boom for say just 1 year. It all depends. But one thing we should understand is that it takes 5 to 7 years for an economic cycle to complete. 5 to 7 years at an average. Having said all this, so what does GDP, how do we understand where an economy is currently based on GDP growth? So once the GDP growth is positive, once it is positive, we have a positive GDP growth, it simply means that the economy can be in boom, the economy can be in acceleration, the economy can be in deceleration for a positive GDP growth. For a positive GDP growth, the economy can be in acceleration, the economy can be in boom, the economy can be in deceleration, or the economy can be in recovery. Yes, for a positive GDP growth rate. So we can have four phases in which our economy would be in if the GDP growth is positive. So when you say positive GDP growth, you need to understand where in the economic cycle is this economy in. Is it in recovery? Is it in acceleration? Is it in boom? Or is it in deceleration? Now my focus is now on the diagram on the right. So for a positive GDP, I'm going to repeat it again. For a positive GDP growth, your economy is most likely in recovery, acceleration, boom, or deceleration. However, for a negative GDP growth rate, your economy can be in either of two phases. That is, it could either be in recession or it could be in recovery for a negative GDP growth rate. I already explained the circle and everything. So now, how does this now affect me as an investor that wants to invest in the stock market? Simply, our goal as an investor that wants to invest in the stock market is simply because you want to buy low and you want to sell high. So you want to buy when the economy is actually in recovery or the economy is actually in recession. The reason why is because during recovery or during recession, all prices actually go down. So there was something I was supposed to mention. The stock market, to an extent, is a barometer of the economy. What do I mean? The stock market actually measures the temperature of the economy. So if the stock market is doing well, to an extent, the economy is actually doing well. You don't want to be buying a stock when the economy is actually doing well. Because what that simply means is that, remember, we said it takes 5 to 7 years. So what that means is that you are buying high when the economy is doing well. What happens is that prices are most likely going to come down. So you're buying a stock price at premium when it's very, very high. The next thing is that is when people that are investment savvy, sophisticated investors, that is when they are actually cashing out. And that's when you are now entering. Because at the boom, you'll be hearing noise that, okay, let's go, let's go, let's go. Let's buy this stock, let's buy that stock because the economy is doing well. When the economy is actually doing well, that's when you, as a sophisticated investor, you are most likely supposed to be cashing out. And I'll explain, we'll see how to go about all this in practical. But I just want to set this foundation. Then there's something else I want to also say. Since you understand now that the economic cycle takes 5 to 7 years, it simply means that if you want to invest in the stock market, you are looking at a minimum of 5 to 7 years to hold your position. So you want to buy when the economy is either in recession or either in recovery, and up until you are going to wait for the economy to get to boom and start showing signs of deceleration, then exit your positions. And you wait again for another cycle. When it gets to recession, when it's confirmed it's in recession, then you go ahead and you go ahead and you actually do what? You buy. I hope what I've been saying so far is clear. All I've been talking about so far is GDP growth and the different economic cycle. So to recap, you buy when for stocks, you buy stocks during recovery or during recession, and you exit. If you understand it very well, you exit during boom or during deceleration. You don't want to exit when it's accelerating because prices will most likely go up. But remember what I said, the caveat, it takes about 5 to 7 years for the economic cycle to complete. So maybe you enter during recovery. So you can wait, maybe it will take another 5 years or 7 years or thereabout for us to see another recession and recovery. So having having said that, so that's just basically it. So I'm going to show us. So I know some of us have questions. Where are we going to? So if I now want to go ahead and see what the GDP growth of, say, for example, a country like Nigeria is, where do I get these resources? Where do I check it? Yes, you can go to the CBN. What's it called? You can go to the CBN website, cbn.gov.ng, and you can get it there. Howbeit, there is a resource that has all these information in one place. So I think I'll move to the next slide. All right. So now we want to go straight into the practical so that I show you how to go about it. So there are four important resources here. So for those of us that want to trade globally, there's an important resource here, which is Trading View Charts. And for those of us that are interested in Nigeria, there's a resource here for listed companies in Nigeria. We'll go through it and I'll show you what to look out for listed companies in Nigeria. Remember, I said our case study is Nigeria. So we're going to be using Nigeria as a case study to see what it is, to explain all these things. Then if you're looking for stockbrokers in Nigeria, irrespective of wherever it is you are in Nigeria, there's a resource here for you to check all the stockbrokers in Nigeria. And also, so the reason why we are showing you this is because for you to trade the stocks in Nigeria, even if you're going to use any fintech application to trade stocks in Nigeria, you still require a stockbroker, because in Nigeria, it's only a stock. You can only access the Nigerian capital market through a stockbroker. So even if you're using any platform, those platforms are going to go through a stockbroker. Then once you understand all the stockbrokers in Nigeria, then there are some, not all the stockbrokers are good to an extent. So, in order for you to make sure that you are dealing with the right one, there's a resource here for the top 10 brokers by performance in Nigeria. So that's by volume and by value. That's people that actually are participating in the market on a on a regular basis. So this is weekly top 10 performance. So these are the resources. Then I think if I have permission to to present my screen or to share my screen, if that is possible. So I just need a confirmation from Havilah Global Exchange if I can share my screen. All right.
Okay, so maybe I should do it from my hand there because of the administrative rights, like I explained earlier on. So you can just give me from maybe
Okay.
on WhatsApp, then I'll present for you. I'll present on your behalf. I don't know if it's fine like that.
No, I think if I can do it myself, if it's fine, because
Uh,
I need to go into details.
okay, okay.
I
Just
don't
just
I don't
give
know
me
if my
few.
screen is being shared now.
Let me
All right.
let me let me try to bring it up. Let me see if it's gonna work out.
All right. Thank you. All right. I don't know if my screen is, if you can see my screen. Okay. Let me still try to share again. I don't know if you can hear me. So I'm present, share screen, entire screen share. Is it okay now? All right. Can you see my screen now?
So we are seeing your face, not your screen. We are seeing your face.
Oh, interesting. I just see my face. So that means I'll have to talk you through. I have to talk you through it. Havilah Global to help me out, if that's fine.
Okay, okay, okay. I can see your screen. Is this your screen?
Yes, this is my screen. You can see
All
a
right.
chat window.
Yes,
Yes.
yes, yes. I just hand over to you now. Thank you, sir.
Okay. So I can proceed, right?
Yes, sir, you can. Thank you.
Okay. Thank you very much. All right. So being able to successfully share my screen. Apologies for that break in transmission. So I was explaining something about trading view. So you are going to be, so the first resource we shared was actually on trading view. So if you click the link there, it takes you here. And I think this is Apple stock. This symbol search here, this is Apple stock. But that's not our emphasis. Remember what we started talking about? We started talking about the GDP growth rate. So if you click here, this is the trading view chart. If you click on this symbol search here, our focus, here you see all, you see stocks, futures, forex, crypto, indices, bonds, economy. Our focus is economy. Remember, we're talking about economic circle. So you click on the economy here, delete this stock here, just go ahead and delete it. Click on the economy, select the economy you're looking for. So our interest here is the Nigerian economy. So I can just go quickly and search NGR, if I'm not mistaken. Okay, this is not the one we are looking for. Okay, this is NGR, Nigeria economy. So go ahead and look for. All right, great. So in Nigeria here, you can see Nigeria GDP. That's not what we are also looking for. What we are looking for is this one here, Nigeria GDP growth rate, not the GDP itself, the GDP growth rate. So you click on it. When you click on it, okay, so we'll see a very funny kind of chart. No, you don't need to have this. This is actually free. This is free. So in order for us to be able to read, this chart, to understand what it's saying, come here. You can see this line here. Click on it and go to columns. All right, great. I think this is fine. So I'm just expanding it for us so that we can understand what this is. I'm going to show us how to read it, and you can check any other sources you get GDP growth rate from. You can see how it's actually done. So remember, the first thing, once you log on that, once you click on that link, you come to what you'll be seeing there is Apple stock symbol. That's not what you need. What you need is Nigeria GDP growth rate, because remember our case study is Nigeria. So you go to economy and you type in Nigeria so that you can see it. Then if you check now, then the next thing you need to do is to make sure that the type of chart that is showing is columns and not line. You won't be able to read the line chart. You won't be able to see what's happening. So you can see this, what's it called? Red, green, and all different kinds of column. So when you see red, it doesn't necessarily mean that it is positive. I'm going to show us how to read it so we understand what's happening. So if I put my cursor on, let's say, the last column by my right, if I click on it, you see something here. You can see Nigeria GDP growth rate, 1M, that's 1 month. So there was something I didn't mention when I was saying, so GDP growth rate is calculated on a quarterly basis. That is, after every 3 months, the information comes out. So you have for March, you have for June, you have for September, and you have for December. So that's how it is. Now, what you have here, right? What you have, so I want us to read it now. So if you see here, you see Nigeria Bureau of Statistics. That is the source of this information. Although the person providing this information is TradingView. You see an eye icon here. You see something 9.68. So what 9.68 is telling you is this is the current GDP growth rate as at the last information. So that is the last information for GDP growth rate in Nigeria was in September. So as at September, it was 9.64. Now this plus 10.08 that you are seeing is actually the difference between the previous GDP growth rate and the current GDP growth rate. That is September GDP growth rate minus June's GDP growth rate. Then what you are seeing here in this bracket, yeah, this is plus 2520, is the percentage increase from the last time to what it is we have now. So sometimes it could be positive, sometimes it could be negative. So now, so I don't want us, so let's just do a simple math. This is September. So if you see my cursor here, if you look down here, you see Thursday 01 September 22, right? 01 September 22 is showing that this information was at September 2022. If I move to the next column, you see it there, it's at June 2022. Now, if you check what was the GDP growth rate when it was in June, you can see it was minus 0.40. Minus 0.40. That was what was our GDP growth rate in June. And our GDP growth rate in September is 9.64. If you do the math, 9.68. If you do the math, 9.68 minus 0.40 will give you 9.68 plus 0.40. Apologies for those of us that are not very good with mathematics. So that information is going to give us, when you add those things, it's going to give us, which is 10.08. So I don't want you to be confused on how to read it. So I've already explained to us how to read it. So you get your information on GDP growth rate. You can get it here, or you can go to cbn.gov.ng to get that particular information. And based on this information, right, we can see where Nigeria's economy is currently. You remember our graph, GDP growth rate over time, and you remember our cycle. We had boom, we had deceleration, we had recession, we had recovery, we had acceleration. Those different phases on the circle that we completed. So if you look at what's been happening, right? So if you want to even check if this information is actually correct, just go back to when was there a recession in Nigeria? What time was there a recession in Nigeria? So if you check the 2020, 2020, because of the pandemic, that's 2019, 2020. So if I scroll down and check, okay, what's the information as at 2019, okay, as at December or as at March, yeah. So I think the height of the pandemic was in March thereabout. So this is March 20. So this was March 2020. You can see what the GDP growth rate was then. It was minus 14.27. So that means Nigeria was clearly in a recession as at March 2020. So I'm trying to show us the picture so that we understand what's happening. So when I knew that Nigeria was in recession as at March 2020, what would I have done? I would have gladly bought any securities in Nigeria, that's any stock in Nigeria. And I would have gotten, so if you check the stock price of most stocks as at March 2020, you find out that almost all stocks were down. And if you check what happened as at, so this one seems very high. So let's check. So this was as at September. Q3 of 2020, the GDP growth rate was 12.12. As at March, so in 6 months' time, it moved from in 6 months, it moved from minus 14 to plus 12. So that means it was doing well. So that means we most likely was in recovery or even accelerating. So the economy was accelerating as at September 2020. Then you can now see what happened in December 2020. The GDP growth rate was negative. So it went back to recovery from acceleration, went back to, so this was in the space of, let's say, 9 months. So in the space of 9 months, moved from recession to recovery, from recovery to acceleration, and back down to recovery. Then the next one was December 2020. Was okay, we had a 0 point, so this was 0 point minus 0.8. Then the next one was minus 13.90. So as a March, it moved back into recession completely. So this is how you can measure this GDP growth rate. Then from minus 13, it went to minus 0.8. So it moved back between recovery. So if you see what's been happening, our economy has been moving between recession to recovery, recession to recovery. Remember what I said, recovery could either be positive or it could be negative. Based on this information, you now understand that the Nigerian economy is most likely in a state of recovery. And remember what I said, it can either move from recovery to acceleration, or it can move from recovery back to deceleration, or it can move from recovery to acceleration. From acceleration, it just moves to boom. So, and also the best time for you to buy any stock is when the stock prices are down. And stock prices are mostly down during a recession or during recovery, and you now start climbing up. So that's you just using only the GDP growth rate or fundamental analysis without even necessarily going to the companies themselves. So that's how to get the information for GDP. That's how to get the information for GDP growth rate in Nigeria. So you can use this information the same way we did for Nigeria. You can also do for other nations and find out what their GDP growth rate is. So still on this trading view, for those of us that trade, for those of us that are interested in securities, global securities, like say Apple, Teslas, and the likes, those securities listed on NASDAQ or New York Stock Exchange, you can also get that information still from this link. So you see this symbol here, NGX. So you go back, click this symbol, delete the symbol, go ahead and delete the symbol. Then in this time now, you're not talking about economy, you want to go into stocks directly. So you click on stocks. When you click on stocks, it can show you, so you can choose. So here you can see here sources, it's showing all sources. If you click on the drop down of if you click on the drop down of sources, it can tell you where do you want to. So which economy are you going to? Which exchange are you going to? So let's say I want to look for securities in NASDAQ. So, so NASDAQ, that's USA. So I'm going to United States of America. So go ahead, click on it. So it will show all the stocks in America. So you can see Apple, you can see Tesla, you can see Amazon. So you can just go ahead, you can see Google, you can see Advanced, as AMD, Microsoft, all these securities. Once you click on them, it shows you the charts. So you can see the chart of these securities, on how you understand. So even for global securities, you can see what's happening. So you can monitor the prices of the securities here real time. Remember where we are starting from. We are starting first and foremost from the economy of that nation. So I'm not surprised looking at this chart. Sincerely speaking, looking at this chart, I'm not surprised that what's it called, Microsoft, the price of Microsoft is going down. It is actually expected, because if you check what's happening in the US economy, the US economy is most likely going to be in a recession officially from first quarter of 2023. Because once the statistics comes out for their GDP growth rate for as at December, you find out that it's actually lesser or lower than that of December. So that's the reason for the decline. So once it's confirmed that it's actually in recession, you can go ahead and buy and just hold. Remember our analogy, you can hold it for from 5 to 7 years. Once you see that it has actually advanced and it's in a boom, you can go ahead and sell your positions. So that's it. So still on trading view. Come back here. So we've shown us for global securities. So I'm going to delete this symbol code. And this time I don't want also this one here is Nigeria. So looking for all the stocks in Nigeria, it's actually loading. So you come here, you can see the companies that are listed in Nigeria: Beja Paints, Total, MTN, Oando, UCAT, and the like. So you can come here and check. So so let me put a caveat. The data here, right, is actually delayed data. If you want real-time data, then you have to buy that information from the Nigerian Exchange Limited. So this can actually suffice for you as an investor. You don't need, except you're a data vendor. If you're a data vendor, then you can go ahead and buy live data. But this delayed data, I think it's delayed for 30 minutes. So it's still fine because your term of investment is long term. You're looking at 5 to 7 years. So what is 30 minutes delayed data? So you can go ahead with this. So you can see what's happening. You can see from the price of MTN. So this one M here is actually, it simply means, so that's M here showing here. It's actually showing the data for 1 month. So you can change the time frame you want. So this is 1 month information. You can see what has been happening. It has been coming. Price of what's it called, securities in Nigeria has been coming down. Why? To also confirm. Remember when we started our session, we said that the stock market is actually a barometer of the economy. It measures what the economy is actually doing. So you can see that prices have been coming down to confirm or validate that the economy is actually in a state of either recession or recovery. But based on our analysis and everything we've learned so far today, we can say it's currently in a state of recovery. Officially not in recession yet. So it's still in a state of recovery. So if we have a what's it called, GDP growth rate that is worse than previous one, then we can now officially say it is in recession. So the rule of thumb is if you have two consecutive negative GDP growth rates, then you can officially say that the economy is in a state of, the phase in which the economy is in is recession. If you have two consecutive negative, that means for example, you had a -9 in September, and in a -9 in September, and in December you are having a -12 or -13, then it's confirmed officially that that economy is actually in recession because you have two consecutive negative. Because you can have a -9, and from a -9 you can go back to, you can still have a negative, but this time you'll be having a -5. That's like an improvement. So it's not an official recession yet. So you can say it's either going towards recession or is in recovery. So you just, since you are not certain, you just say it's in recovery. So that's it. So you can monitor any security here, any security, wherever the security is being traded, whether it's traded in Nigeria, whether it's traded in London, you can find it from this resource here, just this singular resource, tradingview.com/chat. You get these resources. I'm sure Havilah Global Exchange will share with us. Then now, the next resource we shared, listed companies. Remember, we said that our emphasis for this training is actually, our case study is Nigeria. So for listed company, you can get all the necessary information on any listed company in Nigeria. Now, we want to do proper fundamental analysis. So you want to check the financial statement, what's happening to the company, the income statement, the balance sheet, the cash flow statement. You can get all those information free of charge on the Nigerian Stock Exchange. So that link I shared, click on it, is to show you all the companies that are listed in the Nigerian Stock Exchange. So for example, you see some certain kinds of acronyms attached to these companies. Those acronyms, they have certain meanings. If you see the acronym in red, then you should be careful. They all mean different things. So for example, let me use one that most of us might not be aware of. So we see something like ASO Savings and Loans PLC, DIP. DIP simply means delisting in progress. What that means is that this stock is most likely going to be delisted, except they rectify the obligations, or unless they satisfy their or they comply to regulation, then they will not be delisted. Then this DIP will be removed from their name. Then you can see another security like say BLS. It simply means this is below listing standard. Then you see another one, MRF, missed regulatory filing. I think there are about 12 or 14 different what's it called, abbreviations. I can share that with us after this class, so that we can understand the implications of these on the securities. But if you see something like CG plus simply means corporate governance. What that means is that the company has complied with corporate governance, so that is good. But if you see a suffix, to the name of a company that is in red, then you should be wary. Try to understand what it means by BLS or by MRF or by DIP. There are other kinds of acronyms. I'll share that with Havilah Global Exchange, and you can share with us, because our focus, most of us here in this training, are actually in Nigeria, and our interest will most likely be in Nigerian stock market. So you don't go and say, okay, because the economy is in recession or the economy is in recovery, let me go ahead and buy this security. And this security is MRF. So what MRF means, that it has missed regulatory filing. So having said all that, if you now want to get details of this company, go ahead and click. So for example, we are using Access Holdings PLC as a case study. Click on Access Holdings PLC. When you click on it, it takes you to certain important informations about Access Holdings PLC. I'm waiting for it to load, since my internet is a bit slow. So just exercise patience while that loads. Okay, fantastic, great. So when I click on it, I'm seeing the current price of Access Holdings PLC is currently at 8 naira 55 kobo. Then you can see certain other information. What has been the highest price in 1 year? 52 weeks is 1 year. In 1 year, the highest price of Access Holdings PLC has been 10.6 naira, and the lowest value has been 7.5 naira. So that's not even where I am going to. So you can see other informations about Access Bank that are very, very useful. So you can see the profile. So what I'm interested in here is the financial statement and corporate disclosures. So when you click on the financial statement, you can see all the financial statement that Access Holding PLC, not Access Bank, Access Holding PLC, their holdco, has submitted to the Nigerian exchange. Then you can open it and read and see what's happening. Then you can now begin to do your proper fundamental analysis. So that means their profits are good, their books are good, their balance sheet is good, cash flow is good, seems a very healthy company. So because I think maybe the reason why the price is low currently now is because of the state in which, or the phase in which the economy is in currently, which is most likely a recovery. So that means since all the fundamentals are okay, I'll go ahead and invest in Access Holding PLC and just leave it and hold my positions for 5 to 7 years. So that's how to go about it for listed companies. So I already explained to you what you see in listed companies, the different surfaces that you would see, and click on it and go into details. Scroll down, go to the financials, get the financials, and you see um, useful information on the financials. Then that's the second resource that we shared. Then the third resource that we shared is finding a broker. Remember when I was talking, we talked about that the fact that for you to be able to invest in Nigerian stock exchange, or rather in the Nigerian market, you need to come through a stockbroker. So how do you find a stockbroker? Click on that link that was shared. Okay, I think it's still loading. Okay, great. It's up. So you see all the different all when I mean all, I mean all the stockbrokers or trading license holders, as they are now called, that are registered in Nigeria, all of them that are registered, whether they are active or inactive, you have quite a number of them, about 200, and you have about 233 of these different trading license holders. And if you need information about the different what's it called, trading license holders, if you click on it, you know. So for example, Adonai Stockbrokers Limited, in case you don't know where they are, you click on it. Once you've made up your mind, once you click on the stockbroker, it gives you details, contact address, who to call, and everything. So you have information about these stockbrokers and you can call them directly. We just wait for it to load so that we can see, so that we can actually see that bit. So for those of us now, yes, our case study is all right. Just information. There's no information here. Tell me to go back. All right. So the third link gives you information about the different stockbrokers that we have in Nigeria. Then the fourth information, because the stockbroker is registered in Nigerian exchange, doesn't necessarily mean that the stockbroker is actually involved or participating in the market. So we have top 10 brokers performance. So you see it as that on a weekly basis. So you see it, you can see from it's an archive. So once you open it, you can download all these resources. They are free. You can download them and check their performance. What are they trading? The volumes, the value that they are trading, and all that. Based on that, you can now go ahead and say, okay, this stockbroker is has been in top 10 for 2 months or for 3 months. They most likely should be good. Then you go ahead and check the stockbroker. Once you check it over and they are good, then you go ahead and invest with that stockbroker. So I've shown us all the different four resources. So so I'll stop sharing now. I'll stop sharing my screen. That brings us to the end of the second session. Remember, I said the first section was going to be the foundation, second section was going to be the resources, and the third section is now going to be the questions and answers. So before I go to the third section, there was something I didn't mention, which was, yes, our case study is Nigeria, but if you now want to play with, you now want to buy securities or stocks abroad, you can use a fintech company called Bamboo. So you can go to either your Play Store or your Apple Store, and you can download that application, or you can go to their web and use the application. So with that, buy stocks in you can buy stocks in New York, you can buy stocks in London, as the case may be. So that brings us to the end of everything we've said. So in recap, we talked about GDP growth rates, and we talked of how it is used as a major indicator to either buy or sell stocks in the exchange, whatever exchange it is, whether it's Nigerian exchange or whether it's NASDAQ or whether it's LSE or New York Stock Exchange. And thank you very much. I'll hand over to Havilah Global Exchange for the questions and answer. Thank you.
Okay, sir. Apologies, sir. Can you hear me? My network tripped off. But can you
Yes, I
hear
can
me?
hear you, sir.
Okay, so we're back to the slide, right?
Yes.
Okay.
So
Over.
that should be the All right, thank you very much. So these are the important resources that we've talked about. We've talked about trading view chart, and I've shown us how to go about it, how to use it to make investment decisions. And we went to the second, which was listed companies in Nigeria, and we also went to stockbrokers in Nigeria and top 10 brokers performance in Nigeria. So these results will be shared with you, and once you click on them, then you can be able to make your investment decision, even without necessarily going through detailed learning. This is sufficient enough for you to make an informed investment decision. So that brings us to the end of this session, leveraging the stock market. Thank you very much. So we can take questions and answer them if there are.
Thank you very, very much, Sir Mukhtar. Thank you very much for that amazing, short and precise presentation. I've learned a lot this afternoon. I must tell you, I've learned something that wasn't captured in our discussion, and I'm glad that I'm here. Thank you very, very much, sir. So, without wasting much of our time, I'll be asking the participants now if they have questions. So if you have questions, please kindly drop your questions. You make use of the comment box and drop your questions, please. We'll be waiting for you. Kindly drop your questions. Kindly drop your questions. Okay, whilst we gather the questions, can you hear me, sir?
Yes,
Okay.
I can hear you.
Okay, sir. Whilst we gather the questions, and I know some people are just thinking, trying to digest what you've just shared with us. Whilst we gather the questions, um, is there a platform for this kind of investments?
So, is there a platform for investing in stocks?
Yeah, so let's say maybe I want to invest in a stock now. Maybe yes, I want to pick a stock to invest in it, and I don't want to go through my bank. I don't want to go through any fund manager. I want to do it by myself. Is there any way around that, based on your experience, based on your work with the then Nigerian Stock Exchange? Is there any platform available? For example, the MT5 is like a bridge given to retail traders to participate in the financial market. So is there any platform available for retail? Let me use the word for retail, uh should I say stock traders now, to participate and also just take advantage of what is happening in the stock market? Thank you, sir.
All right. Very, very fantastic question. The answer is a positive yes. So there are several platforms in which you can actually participate directly as a retail investor in the Nigerian stock market. So remember, I said in order for you to come to the Nigerian stock market, you have to come through a stockbroker. So we have different kinds of stockbrokers. So we have, for example, the likes of the United Capital Securities, they are stockbrokers. We have the likes of Meristem, they are stockbrokers. We have the likes of AfriInvest, they are stockbrokers. So any of these stockbrokers, so when you go to the list of stockbrokers, all those lists of stockbrokers, and you check and see top 10 performance, go to them. Once you go to them, once you are comfortable with these stockbrokers, so just like we have so let me put it in perspective for us. So just like we have different commercial banks in Nigeria, about 25 or thereabout commercial banks in Nigeria. That's how we have 200 over 200 stockbrokers that you can use to access the market. So you can see that for you to access the market, you even have more options than for you to save your money in a bank. So
Wow.
once you've identified the stockbroker you want to use, then you can download these stockbrokers. They have apps. Most of them that are tech savvy already have applications that you can download the applications. Once you download the applications, You can, once you've done your analysis and you say, okay, what you want to buy, say for example Dangote Cement PLC, you go ahead and you put Dangote Cement PLC, the unit, the price you want to buy it, then they are going to match it for you. Remember, I said that in Nigeria, for you to access the market, you need to come through a stockbroker. So that's why you still have to go through these stockbrokers. So there's no one platform that just gives you access directly. So you have to choose: am I coming through Meristem? Am I coming through United Capital Securities? Am I coming through Afro Invest? Or am I coming through any of these um, numbers of stockbrokers? Once you've identified that, then you go ahead, check if they're tech savvy. They most
Have
likely
an
have
app.
an application, yes, that you can use to access the market, and you can see the prices moving, just like I showed us with Trading View. So they have something like that, that you can see what's actually happening, and you can monitor your position, monitor your portfolio. So I don't want to just go ahead and say use this particular stockbroker. That's actually wrong. So you have
That's
to,
marketing.
yes, that's actually marketing, which is wrong. So you can use any of them. So there are about 20 of them that are really really tech savvy, that you can actually
Um,
use. And that's one bit. The other bit again is, you can, although this is not you participating directly, right, you can participate via all these mutual funds. So this mutual funds is more like, how do I put it, it's a collection of resources that a fund manager uses to invest on your behalf, or on the behalf of everybody that are in that collective. So this mutual fund, there are different kinds of mutual funds. There are some that specializes in investing in just equities. There are some that specializes in investing in bonds. There are some that specializes in investing in, say, what's it called, commercial papers, treasury bills, and the likes. While some, they focus only on equities. So depending on the kind of mutual fund you are investing in, that you selected, you can also participate in the stock market indirectly. And those funds actually give, sometimes, okay, I didn't even mention this while I was presenting. Stock market can give you in excess of 100 times returns on investment.
wow.
100% return on investment. It can give you more than that. It can even give you up to 1,000% return on investment. No exaggeration. Especially when, if you enter during a recession and you're
That's true.
exiting during a boom. So you can be buying. So we made mention of the Access Bank when we were doing our case study. Access Bank is currently about 8 naira. This is because it's currently in a recession, or are currently in a recession, or we are currently in recovery. When we get to boom, the price will not be 8 naira. The price will most
Yeah.
likely be something close. It can be close to, what's it called? It can be close to 30 naira. That's almost, that's over 300% return on investment on just one single stock. So,
Mm.
so go back to your question. Yes, there are applications you can use, and for international stocks, you can use Bamboo. That application, you can actually use that, or you can use Trove. There's also Trove or Bamboo. You can use it to participate in international market. Thank you
Wow.
very much, sir.
Thank you very much for that amazing response. Any questions from our participants? Any questions? Please, if you have questions, just drop. Or if you have any comments, you can just make use of the comment section so that we know what's on your mind. So that we know what's on your mind. Okay, so sir, one more question from my hand. You talked
All
about
right, sir.
meeting equity manager, someone that gathers funds from different sources to invest on behalf of the participants into the forex market. Is there a way to test uh, the reliability of such companies or individual? Like, okay, someone comes to me now, or I'm seeing an advert of an equity manager, or someone is referring an equity manager to me. Is there maybe a regulatory body that takes charge of their activities, that censors what they do, ensures that they are doing the right thing, I ensure that they are doing things that will benefit the masses. So is there like maybe a laid down test, things to check for? For example, if I want to invest in a company now, let's say the normal shares of a company, I know the things to look for: the track record, the loan returns rates, and so many things using the financial document of the company. But for this now, this may not be a company. This can be an individual. This can be a group of company. How do we? Is there something we can use to check for their reliability, sir? Thank you, sir.
Right, very fantastic question. So what me I typically tell people, don't invest your money with somebody that says his name is Mukhtar Mohammed and blah blah blah. This Mukhtar Mohammed is an individual. Mukhtar Mohammed is not a company, and Mukhtar Mohammed is not registered by the Securities and Exchange Commission in Nigeria. So a typical, so just like the Nigerian exchange. So we have Nigerian NGX regulation, that's Nigerian Exchange Regulation, as a company. So what Nigerian Exchange Regulation does is that they regulate all these listed companies in the market. So you see that those suffixes that I showed us on listed companies that was showing us DIP, BLS, MRF, those are forms of, so, although those companies are okay in quote and unquote, but those suffixes are trying to protect the investors, saying that investors, see, this company has missed its regulatory filing for, let's say, it has not submitted its Q3 for September 2022. Be careful if you are investing in this company, or if you already have money in this company, please be careful. So that's NGX regulation. NGX regulation regulates these listed companies. NGX regulation also regulates all the trading license holders, all the stockbrokers. They are regulated by NGX regulation. So I know that's not your question. I'm just trying to bring in the context of regulation into
Yeah,
it.
I get you,
So
sir. I get you, sir.
for your question, for the investment managers, the fund managers, they are regulated by the Securities and Exchange Commission. And now this Securities and Exchange Commission they also regulate Nigerian exchange regulation. They regulate Nigerian Exchange Limited. Any institution, any company that is playing in the capital market are being regulated by the Securities and Exchange Commission, and their regulation is extremely stiff. Anybody that is not registered by the Securities and Exchange Commission cannot participate in the capital market. So if it's in terms of regulation, that's why I say don't invest with Mukhtar Mohammed. Mukhtar Mohammed does not have a regulation, is not regulated by NGX regulation. Mukhtar Mohammed is not regulated by Securities and Exchange Commission. So any company that you want to put your money into, so you find out, like a typical example, all these investment managers, all these investment fund managers, they are being regulated by the Securities and Exchange Commission. So the likes of your Stanbic IBTC asset managers, or the likes of your ARM, or the likes of your United Capital Assets, all these companies are being regulated by the Securities and Exchange Commission. Also, aside from the fact that the stockbrokers or the trading license holders are being regulated by NGX regulation, they are also regulated by the Securities and Exchange Commission. So there are two levels of regulation involved. So if in terms of regulation, if you use the proper channel, you don't go to an individual to invest, to want to get returns, you are almost always covered. So that's my answer to that question. I hope it answers your question, sir.
Yeah, thank you. Thank you very much. One last thing before I move to the question of the participants. Um, when it comes to investing into in the stock market, is there a guarantee using
Okay.
the methodology that you've given to us now? Is there, because for some people now they will now go, okay, let me get a loan. I just got this clue from Mr. Mukhtar Havilah Global Exchange webinar, and then we've been told that once a country is on recession, we can buy into their currency. Once the company is on recession, we can buy into their currency, and from there we exit when they boom. So is it like a guaranteed methodology for profitability, or it can be dicey and may not work out the way you have spelt out now? So I just want it to be clear with that, sir. Thank you.
All right. Very, very fantastic question, because I'm going to explain certain things that I might have skipped in the course of presentation. So first things first, I would not recommend anybody to get a loan to invest in the stock market. I can encourage you to get a loan to invest in a business. You're going to be buying or selling, or you're going to be offering services. I can recommend that. So having said that, concerning stock markets, right? There's something I didn't mention, which is you when you invest in the stock market, there are two things that can happen. Either the first you receive dividends, that's in terms of profits on a yearly basis or on a quarterly basis, or on as the company decides to share its dividends based on their dividend policy, or you can have capital gain. So getting dividends could be, let me just explain it for all of us here. Dividend simply means that I invested, let's say I have 1,000 units of shares in Mukhtar's PLC. 1,000 units of shares in Mukhtar's PLC. And at the end of the year, Mukhtar's PLC did very well. And Mukhtar's PLC did so much profit. And they said, okay, let's share some of these profits to our owners, that's the shareholders. And Mukhtar Mohammed
Shareholders.
has 1,000 PLC. Yes. So you could say that, okay, let's give for every unit of share you own, you could be getting, let's say, 5 naira as dividends. So me that I have 1,000 units of shares, what that simply means that at the end of the year, I'll be getting 5,000 units. Sorry, I'll be getting 5,000 naira as dividends. So let's say I own 1 million units of shares, I'll be getting 5 million, depending on how the dividend is. So that's one thing that you get from stocks, but not all stocks give dividends. Some don't pay dividends. So that's one thing. Then the second thing could most likely be that you get a capital appreciation or capital gain. It simply means that I bought at 8 naira, and 5 to 7 years time is now 30 naira. So I've gotten capital gain of 22 naira. By the time I do the return on investment, we are getting about over 300% return on investment. But in terms of the amount, it's just 32 naira. So that's the second thing you can get. So I said you can either get one or two things, or you can get both. You can get both dividend and also capital gain, or you can get none,
Wow.
depending on the economy. So I'm coming to answer your question. I just wanted to
Yes,
bring in
I
this
get you, sir.
background, this context. Yes. Then also, when it comes to now, I want to answer your question. When it comes to stocks, right? Stocks is high risk, completely high risk. I wouldn't advise somebody that is in their 50s or in their 60s to be investing in stock market. No, you shouldn't be investing in stock market because it's extremely risky. And that's because for stock markets, right, if the company goes bad or a company goes bankrupt, you as an investor in that company, you will most likely lose every single of your investment, because the last person to be paid are the shareholders, the ordinary shareholders. If a company goes bad, they will pay the banks, they will pay the people that they are owing money, they'll pay everybody. And if there is now anything left, they can ask, okay, let's give the shareholders. Then most often than not, if the company is going bankrupt, the shareholders don't get anything. So you've lost all your investment. So that risk factor is there. So I just want to put that fact there, that risk factor is there. Investing in stock market is high risk. However, if you understand, there's almost a guarantee. So now I'm answering your question, having brought all this foundation.
Yes, sir.
If you if you buy in the market truly when there is a recession or when there's a recovery, especially when it's confirmed that it is a recovery, if something falls down, right, it gets to a point that you can't go below the ground. So you're on the let's say we have a story building, and the story building is 7 floors. So if someone falls from the 7th floor, the person cannot go below the ground floor. So if the person has reached the ground floor, whatever that ground floor is, the next thing is for the person to start going up, irrespective. Except the only exception is if the company goes bankrupt. And if the company goes bankrupt, then there's no longer any floor. There's nothing again remaining, so you've lost everything. But if you buy during a recession, in a recession or recovery, it's most likely at the bottom. The next thing for the companies to start doing is to start going back up. So there's almost, although there's no guarantee in any form of investment, but the probability of you being very profitable in the stock market will most likely be when you buy during a time of recession or a time of recovery. So I could say maybe 80% probability, that's in the high rate, 80%, you most likely be profitable. I hope that answers your question, sir.
Yes, sir. Thank you very much. So for those that are just joining us, which I believe we are basically youths, it's a good time for you to take advantage of the knowledge that you've just been given. You don't need to wait till you are 60 or 70 years old before you take advantage of the stock market. The fact that this is coming to you now means there's potential in it for you. So I have a question here, sir. Um, when you observe that the stock market favors you selling your stock, do you sell through the same stockbrokers? What is the process involved in simple times?
Okay, the process, it's extremely simple. The same way you buy through a stockbroker is the same way you sell through a stockbroker. That is in Nigeria. If you are participating in Nigeria stock market, so if it's abroad, that if you are using the likes of Bamboo and the likes of Trove to invest in Nasdaq or New York Stock Exchange or London Stock Exchange or the likes, it's still the same thing. So you just go and say you want to sell certain amount of your units or certain amount of your positions. So it's extremely simple. And for those stockbrokers in Nigeria now that are not tech savvy and don't have applications, there's something called what's it called? A mandate form. So you fill your mandate either to buy or to sell, depending on it. So it's actually a seamless process. Yeah. I hope that
Okay.
answers your question, sir.
Thank you very much, sir. Thank you for that. For those that want to invest in international stocks, you can make use of the bamboo that he said. I've checked it, so it's very very easy for you to fund your account and even withdraw. So I just dropped the link on the chat section for those that are interested. Sir, can we invest? Can we buy local stocks on bamboo too, or it's just international stocks?
You can also buy local stocks on Bamboo as well.
Okay, that's perfect. Thank you, sir. Okay, one last question here before we wrap up for the day, sir. I would like to ask a question using this case study. Let's assume a new fintech company like Piggyvest and other companies call for people to invest in them. How do you know if they are registered? Okay, I think for case study now, I think few months back, MTN called for investments. Called for people to come and buy into their shares, which personally I was against actually. But I believe this is the type of question the person is asking, that how do you know if they are registered? And for when a company comes out like that, like they come all out like that, yes, we know they are a global company, so they will definitely have stocks for people to invest in. They don't really need to come out to advertise for us to invest in them. So when a company comes out like that and starts giving opportunities for people to buy into their shares, give deadline for the purchase of shares, how safe is that? Then, like you said, how do we know if they are registered? You have to check through the necessary regulatory bodies which you just shared. So I'm just trying to divert the question because this has been answered initially. So how safe is that kind of marketing of a company shares when a company comes out? Okay, for example, let's say Havilah Global Exchange has been listed on the um, Nigeria Stock Exchange now, and then I just come out one day all of a sudden and I start, promoting the shares of the company. How safe it is? Do I need to be wary of that? Do I need to be concerned when I start seeing adverts like that? Thank you, sir. That will be the last question
All right.
before we wrap up for today.
All right, very, very fantastic question. So now we're now going into the nitty-gritty. So before your stocks are traded, you have to come to the market. You have to be listed. And the purpose of you listing, so you can either come through an initial public offering, which is called an IPO, or you can also come by a way of introduction. Someone is introducing you to the market. So for that first one, right? So the primary listing, what that simply means is that is when the company is coming to the market for the first time. And for that to happen, there's a duration of time in which that is permitted, so that the next phase can now start, which is the secondary market. So there's the primary market and the secondary market. So this buying and selling of MTN shares that we are doing currently now, these are secondary markets. The primary market was the initial public offering. That time MTN was announcing, please buy MTN shares and all that. It was just for a short period of time because they're coming into the market. So once they are now listed in the market, it now becomes a secondary market. So those people that came in initially, they came in at about 19 naira, if I'm still correct with my statistics regarding MTN now as our case study. So they came in
Yes, sir.
at about 19 naira. So
Yes,
everybody
sir.
that came in that time and participated would have bought MTN at 19 naira,
Yes, sir.
irrespective. Everybody had the same price, so it's not a different amount. So in the secondary market, people buy at different prices based on demand and supply. So you can be seeing somebody buying, instead of, say you bought in the primary market at 19 naira, in the secondary market you will not be buying it at 19 naira again. Depending on
Mm,
how the security is doing, you can buy it for less or you can buy it for more. So it is okay for all those timing to be given because of the kind of market in which they are coming into. For secondary market, you don't need a multi-core. There's no publicity for secondary market, but there's always, not almost, there's always publicity for primary market. You see it on the
mm,
newspaper, you hear it on the radio. If it's a company that has a multi-core client, it will send those notifications to its clients to participate. So it's for a
mm,
duration of time. So that's answered one question. So it's actually okay to do that publicity. Then the other question to know if it's actually legit is, where are they going to be listed? If they are going to be listed there, you go to that what's it called, to the exchange. Depending on the exchange they are going to be listed, you go there and you check, do your research, and you get information about the company, and you say that, okay, yes, this listing is actually going to happen. Then if a company is going to be coming, if a company is now going to be listed, one of the first requirements for a company to be listed is that the company must become a PLC, a public liability company.
mm.
So once a company is a public liability company, it simply means that it has an audited financial statement. Go to the audited financial statement and check the financial account, check the income statement, check the statement of cash flow, and check the balance sheet. If it's okay, and you check the management as well, which is very, very important. So those are the fundamental analysis that you have done on the company. And once that is fine, then you are actually safe. You're actually safe. Then you can go ahead and invest in that company. Thank you.
Thank you very, very much, sir. Thank you very much for giving us your time. Thank you for sharing with us from your wealth of knowledge. I want to believe the participants have learned one or two things. Me, myself, I've learned quite a lot from this session. So, our participant, please, can you just type "Thank you, sir"? Use the chat section to appreciate our guests this evening. Let him know you guys appreciate his time with us. So I'm not seeing anything. So just type "Thank you, sir. Thank you, sir. Thank you, sir. Thank you very much, sir. We are so grateful. We are so honored to have you. I know what it takes to come up with this slides and then be part of this session. It's quite tasking and it's a sacrifice. Thank you very much. Knowing fully well that you have quite a lot on your table and you would like to probably do one or two things before you relax and rest for the work tomorrow. I would like to just relieve you and just allow you go now. Thank you very much, sir.
Thank you very
I'll
much for having me, Havilah Global.
thank you,
Grateful.
sir. Thank you, sir. Cheers, sir.
Cheers.
Okay, guys. I want to believe you guys have learned one or two things from this session. The video will be made available for everyone to rewatch if you want to. If you wish to, the video will be made available for you guys to rewatch. For those that joined us yesterday and they are also here today, thank you very much. Thank you for coming around. I think this is like our first live session. Yes, we've done quite a lot of webinars on finance, financial intelligence and all, but this is like our first live session, and the turnout is quite amazing. Thank you very, very much. I assure you we'll be bringing up people here to give us financial intelligence, help us know what it takes to build wealth even from nothing. You can start from nowhere. Like I always say, you don't need to have so much to build so much. The fact that you are building means there's nothing on ground. You are just starting from, even if you are a teacher, if you're a primary school teacher, you can start from that place that you are now and then scale up. Thank you very much everyone for once again for coming around and joining the session. Please, I will advise and enjoin you guys to do well to go and rewatch the videos over and over and over again. Till we meet, cheers and God bless you all.